Jobs number was a blowout, recession, or no recession? What's up, everybody? Welcome aboard to Bubba's Bottom Line. It is Todd Bubba Horwitz with you, and what's going on this wonderful weekend and of unbelievable jobs report that just blew the doors off, and it was funny, well, not funny, but interesting when you went from the potential of a jobs number that was an ADP private sector number that was a miss, and now you go into a number into the actual number that's going to be a big winner and a big hit. It's incredible the action that's going on here, and I guess that brings the question back: are we in a recession, or are we not in a recession, or going into a recession? And again, today's jobs number or Friday's jobs number does nothing to say that we're coming out or going in or whatever. I still say and stand by the fact that I believe we are in the very early stages of a recession. Again, it doesn't mean it's going to affect the market today. I can't stress that enough, that the news don't mean jack, okay? Let's just tell it straight like it is. The reporters don't know jack. The most on-air talent doesn't know anything. So you're getting not information that's really relevant anyways, okay? So we know that there's problems. There's problems globally with every product. Okay, so it's not like we cannot be going into a recession and still have a strong market. There's still money to be put away. There are still pension funds and IRAs and things that money flows to the market every day, no matter what the economy is doing. So again, we're slowing down. Things are not as rosy. Yes, a lot of jobs, great, and it's wonderful to have great jobs. I have no problem with that. Look, I'm not trying to talk the market into a recession. Okay. Because I'm long. So I certainly don't want the market to go lower here. Okay, number one. Number two, I want to see President Trump get reelected. Okay, and I do predict that this would be, if it wasn't for the way this country has turned over the last 40 years, and California and New York and Illinois weren't automatic to the left, okay, this could be the biggest romp since McGovern. Okay, but again, it is what it is. And again, I don't want to see a recession. I'm just telling you what I see. I'm sharing with you details that are telling us that things are not quite as rosy. Again, we go to the manufacturing. We go to the types of jobs that are being created. And again, look, let's be clear. I want the market to go up forever. Okay, I've got 99% of everything I have is in the stock market. Okay, so certainly I want to see it go higher. Right? But let's not confuse the issue of what can happen to an economy and how it can start to slow, which we are seeing slowing, which means it should be slower GDP. Earnings suck, okay? They can make all the stories and cases they want about how good earnings are, okay? But again, I gave you the number last week. $70 billion in increased dollars through earnings, okay? $11 trillion created in stock market wealth. You tell me that relationship. That's not a healthy relationship. In the meantime, Germany's industrial productions, and they're the second biggest nation in production, crashed. Okay? So again, is there going to be is there a magic potion coming out? Okay. You've got Japan, once again, the leaders, the originators, the innovators of this ridiculous quantitative easing program that is back at it again. This is now 30 years that Japan has been dealing and fiddling around in their markets. Okay. So again, and they have not been successful yet. So why would we think it's going to be successful now? Well, it certainly is success. Central banks at robbing the middle class. They're certainly being able to take the money out of your pocket, because the bottom line is simple. Okay. If they keep fiddling around and keep taking these markets down and keep lowering interest rates and keep lowering the currency, then that $100 bill you have in your pocket is worth about 20 cents. Okay, that's all they're doing. All right, they're trying to reduce the massive amounts of debt that are in every nation because of the lousy ignorance of the policies that they give you. Okay, so I mean, Japan, I believe, owns 55 to 60% of their markets to begin with. So you're going to tell me that's not a problem when the government has to prop up the market. That is telling you that they don't want the free markets to work, and eventually they want to get away from real money. Okay, so that you can't tell how much they're actually taking. All right, I'm not going to call it stealing. Okay, but it certainly it ain't kosher what they're doing. All right, so again, you're seeing this happen all over the world. Okay, I mean, and you've got a lot of underhanded deals going on, including the geniuses from OPEC. Okay. Again, look what happened to oil. Okay, now it was very interesting. As you know, I hate being long oil. I am long it, but look what happened to it. It got crunched on Friday a week ago. Okay, it came all the way back, and on Jobs Friday it was lower, and suddenly, bang! It's right near $60 out of nowhere. Okay, now again, this is all some artificial BS going on. And again, I look, it is what it is. But again, you're getting, and the real truth is that there's no reason for the artificial BS, because we in the United States of America produce our own oil. We are not beholden to OPEC. So why do we react is beyond me. Okay. But now, the United Arab Emirates, another big area, okay, their economy tanked to 10-year lows, okay? I mean, the private sector tanked to 10-year lows, I mean, on recession fears. So again, you're telling me that they're just afraid, okay? Again, the numbers there tell you what's happening, okay? And again, that is not the correct direction, all right? These are not good things that we're seeing, okay? So I think you continue to watch. Okay, but these QE bubbles they create. Okay, and Alan Greenspan was the first originator. I mean, but again, let's be clear: the Fed, okay, and central banks since the 1600s in England, their central banks have been robbing the people, and our Fed since 1913. Okay, look again. Just look at the numbers. You don't have to believe me. Okay, just go check it out. Take a look. Take a look at what the value of the dollar. Take a look at what's going on, and that should be clear enough for you. Okay, you don't have to take my word for it. Okay, listen, I was a Fed believer. Okay, I was a believer in it. Okay, and again, as I've studied it more and I've watched more and I look what's going on. Obviously, they don't want true, free, and fair markets. They want to be able to manipulate markets the way they want them, while creating these massive amounts of debt. I mean, the world is only $250 trillion in debt. Okay? They don't think that's not going to have to be sold at some point. And now China has lowered their 2020 growth target by 6%. Okay? Now, A, if they're willing to lower it by 6%, it's probably 20. Okay? B, we never get accurate numbers, so we don't know. But we know they're not lowering them because they want to make them look bad. They tend to overreport. They've got so many problems in China. Forget about the trade wars for now. They've got between the hidden cities, which are fully valued on their books. Okay. And again, think about this. Japan started this when they bought Pebble Beach. That was the world's highest record purchase of a piece of land. Okay. And they've gone nothing but downhill since. All right. China has done the same thing in various ways. They've got so many what they call hidden cities that are marked in their books at full value. Okay. Now, again, we know there's got to be some depreciation. So again, you're seeing that they're admitting to having a 6% potential slow. So what does that tell you? It tells you that there are issues everywhere. Okay. It is telling you that there are problems. Okay. Now we can see it in our own. We've seen the GDP continue to fall slightly. Now again, we're not going to collapse. Okay? And I'm not telling you that the markets are going to collapse. I'm just telling you that we are seeing a slowdown. And what slowdowns mean what? That means that even though the great jobs number on Friday may not be so great going forward, because what happens as soon as the money stops flowing in and the sales stop coming in and the trucks aren't delivering, okay, remember, we're in the height of the season, right? If there's not going to, if we don't get big sales now, there ain't going to be big sales. Okay, so we're right into it. That's where the Santa Claus rally comes from. So now how are we going to do after the first of the year? Okay, what are the profit margins going to be like? We already know they've been very bad. So if you look at it from that standpoint, we're slowing. Okay, again, it's natural. It's not anything major. It's not a crisis. Okay, India, they're not bringing in as much gold, and they're one of the number one gold buyers in the world. Why? Because they got no money. Because their economies are struggling. So you're getting the drift of everything that we see. Okay, and of course now you see the trade wars, and for some reason, and I don't understand investors and traders. If I had the information ahead, if I was sitting in the room and could get the information, yeah, I'd love to be able to trade off of that. But I'm not. So we're always getting the trade tweet or the trade news 1 millionth hand, right? Way down the food chain of how it gets delivered. Okay. So you cannot act on that. That's what creates these big whips, either straight up and then goes right down, or straight down and goes right back up, because it's got the innocent people, okay, the inexperienced traders and investors that chase these around, okay, like a dog chasing their tail. You keep chasing around the news. Forget about the news cycle. The markets will tell you everything you need to know. The charts will tell you everything you need to know. And right now, the market tells you they're probably going higher still, okay? Again, we have never wavered. We had a reversal, and we'll talk about more of that when we get to the trading part of our show. Okay, but again, things don't change. Okay, and that's where you have to take it and understand it. Okay, and of course, the biggest story of the week. Oh, Nancy Pelosi is going for impeachment. Gee, are we surprised? I mean, and I don't know what you think out there, and I know I have people on both sides of the aisle. Okay, and as I told you, I'm center. Okay, but in this case, I'm way on President Trump's side. I mean, the left has lost their mind, and this is going to cost them the election. Okay, this will cost them the election because first of all, they can't find a candidate, right? Maybe they'll get somebody. Maybe they'll dig somebody out of the ground and get somebody that's already dead. I mean, you got Joe Biden who's fighting with potential voters. Okay. And you got, Michael Bloomberg trying to get in and try to buy the election. All right. I mean, again, you've got a party in total disarray. Okay. Maybe Hillary will come in and win the brokered convention. In the meantime, this impeachment is a joke. It's absolutely uncalled for, ridiculous. And I don't care what you think, because at the end of the day, you got a year left. You want to spend it now. So let's let Congress spend the rest of that time trying to impeach President Trump. Okay, instead of passing the MCA bill, USMCA, instead of doing what they're actually there to be paid for. Okay, but of course, that would not help them. They wouldn't be able to line their pockets if they did that. So now they got to work on this ridiculous. In the meantime, it is all a joke. It is ridiculous, but it is the way it is. This is Bubba's Bottom Line. It is Sunday, December the 8th. Geez, Christmas is right around the corner. And of course, if you want to, we're going to step out here for a break. If you want to get our most recent webinars on micros and minis, futures trading, all you got to do is email me at bubba@bubbatrade.com, and I'll be happy to send it out to you. I think we might be doing a fresh one next Saturday. I'll let you know during the week. But in the meantime, also don't forget about our high school program at Patreon, patreon.com/BubbaTrading. It's patreon.com/BubbaTrading. Now let's get back to Bubba's Bottom Line with me, your guest, your host, Todd Bubba Horwitz. Welcome back to Bubba's Bottom Line for Sunday, the 8th of December. And of course, here we are. And as we told you all week, we're still predominantly long. We had one reversal in our portfolios. Okay, we're short the Dow futures. Okay, but we're still long the Russell. We're still long the NASDAQ. We're still long the S&P. Okay, so again, we didn't massively just get short because again, we're mechanically trading based on the formulas of the proprietary formulas that we have that allow us to stay in the markets, even sometimes they look like they might be changing, and they didn't. The same thing that happened with crude oil. I mean, certainly people would have panicked and puked out of crude oil last week, and of course we were able to stay in based on our formulas, and here we are, higher than we were. So again, it looks like the equity markets want to continue their rally. Okay. Again, it'll stop at some point, and maybe this is it. Maybe this is just maybe Friday was just a dead cat bounce. But we said all week it's going to bounce at some time. We'll see. this rally will come back. And sure enough, there it was. Crude, again, looks like it wants to get to 60. We thought that 60 was the number. Now, again, it could go higher. Obviously, it could go test that Saudi Arabia high. If you remember from when the Iran drones bombed the Saudi Arabia, and of course, that could get back up to 63 or 64. Now, we'll see about that. Certainly, the formation is not as bullish as you would like it. If you're long, I am long. So it's not as bullish as I'd like it because it's really more still in backwardation, which means that all the front money is where the price is. And today's oil is more expensive than tomorrow's oil, basically. That's what it comes down to. Gold, everybody kept harping. Oh, how can you want to be short gold? It's going up. It's too many problems. Well, I don't know. Suddenly, after failing for the second time at $14.90 based on the February futures, gold was only down about 17, 18 bucks. Okay. Once again, until proven otherwise, we are under the assumption that gold is going lower. Okay. And again, I own gold in my retirement account. I own gold in my safe. Okay. But from a trading standpoint, I'm short. I sold more, and I'm not getting out until the numbers change. Okay. And right now, not only are the algorithms at the right timing it perfectly, but reading the chart times it perfectly. It showed you both times it should have failed, why it failed, and how it failed. So again, you can whine all you want about you should have bought it. You know what? One thing I know, it's always better to buy it when they're going higher and they look solid versus trying to catch the falling knife of a product that you have no idea when and where it may stop. Okay, it's pretty much that simple. Bonds are whipping all over the place, basically lower. Okay, they had one huge update this week, but basically they're under pressure, which means interest rates are going higher. Now, I know that mortgage rates came out, and I know somebody just got a mortgage for 3.8. Okay, so again, hey, that's great, but the bond market is saying that interest rates are going to go higher. Now, I don't know, if Powell is going to do anything now. We've got the meeting this week coming up, Tuesday, Wednesday, and I don't know if Chair Powell is going to do anything. Okay, if they're going to rethink and maybe hike, possibly. I mean, obviously, the numbers are very strong, jobs numbers. So, do they think of hiking? I don't really know. I'm not going to tell you, but I don't really have an opinion, okay, of what they're going to do. My guess is they're going to stay the course. They're just not going to cut, all right? And again, the rally was even more interesting because, with it being the number being so positive, you would think that the free money people would be a little bit concerned, but they're not concerned about a hike in rates here either. So we'll see what that all looks like. And of course, the dollar got smushed. Okay, and just when it looked like the dollar was going to go back up, we were long the dollar, now we're short the dollar. Okay, and of course, obviously that was not a great trade, a little bit of a whipsaw. But again, just when it looked like it was making that nice little W bottom and pushing forward, bang, down it came, and it's now testing the lows again. Now, if it breaks through the lows, it's going significantly lower. It wouldn't surprise me for us to come and test that low once again and then force higher. I can still see par. Obviously, it will not be this year. Okay, which I once originally had thought. Grain markets, I'll tell you, I got some real concerns here in the grain markets. Okay, first of all, corn is unbelievably weak. Okay, beans have put Wednesday, Thursday, Friday they put a little bit of a show on, but again, for beans to go up 5, 6 cents, 7 cents, it's not that big a deal. I mean, it's nice if you're long, and I'm short them, but it's nice if you're long. But certainly beans are capable, especially under the pressure being down almost 11 days in a row, it could go up 30 cents, right? So 5, 6, and 7 is not something that excites me. But on Friday, they were up bigger and they failed. Okay. But my real concern in corn, in corn and beans is very simple. We know how weak the banks are, okay, to farmers when they owe them on their crops and they see prices falling. So I'm concerned that will create a forced liquidation, okay? And what that means is they're going to come in and they're going to, as they used to do in the trading floor, they're going to tap you on the shoulder and make you sell so they can get paid. Now, for a trader, that's actually good news for me as a trader, because as a trader, that would actually force a bottom, okay? Because really what I see right now in beans and corn, which I'm short both, they're looking for a bottom. So that would actually force the bottom because it would be a blow-off. It would be very similar to the Tyson fires in cattle. And you can see what's going on with cattle. And of course, wheat looks pretty good. It came back down to support on Friday again and bounced a little bit again. So wheat looks like the best. Looks like it's breaking out. But honestly, although we're long wheat and short the other two, I really think they're all going to go higher eventually here. And I would always much rather be long grains than short them. But again, I'm trading mechanically. I'm not arguing with the model. Okay. Meats, hogs continue in that, pounding. All right. Now they're testing that 66 level again. Now I think really at 66, above 66, they're mediocre and we're still short. Below 66, I think they could really get flushed. I think they got to get back over 70, and then we might see some kind of rally. But they've been for the last eight or 9 days, they've been in about a $3 trading range. And of course, they've been extremely active and extremely volatile. So again, that usually makes a sign of another big move is coming. And based on where they're at, my guess is, and I'm short them, but my guess is that there's going to be a rally coming. Okay, and they are going to break to the upside. Again, we've been short for a while, so it's not the end of the world. But again, a simple point, there's going to be a move. Okay, and I'm going to say that move's going to be 10, 15%. And it could be in either direction. Live cattle, fat cattle, same thing for those of you who don't know. It looks great. Okay, a little bit of a pullback, but again, we expect it to come back down to 122, 123. But I think 130 is in the cards now, and I think more new highs are coming. I know there's been a big discrepancy between cash and futures, but at the end of the day, you can just see the way the chart is acting, the way the technicals, and the way the money flow is. They're going to look like they're going to continue to go higher. Feeders had a rough week. Now we actually got short feeders at the end of last week, based on that that big down day. But of course, I think that they're still lower and they're a little bit weak here. But I think 138 in January feeders is probably a great spot to step in, and hopefully that will be reversing once that happens and we start to go back up again. Because I do think that, again, longer term, okay, I think the ag space is going to be the space to be. All right, I think that that's really going to be, because if we do see some selling pressure, okay, which I think eventually we will. And again, I'm not predicting when, but eventually we will. A lot of that money will flow to the grains. And I don't think the trade wars are opening up anytime soon. I think that's a crock. Okay. I don't think Trump really wants it to happen. And I don't think that China really wants to buy our soybeans anyways, because they can still buy them cheaper elsewhere. So, right now, remember, it's always a competitive business. And when everybody's got product, which they do, it makes it a lot harder. So, again, trade Schmade, I don't think it really mattered. I think the bigger case is what I always say is it's an oversupply. And that's where we are there. So I wouldn't get, again, I think we'll go higher. But again, we have to, we need an event to create a shortage. Okay. Because again, I don't think China is in a hurry to buy. Why? Because they can buy in Argentina cheaper or Brazil right now. So I think that becomes more the issue than the trade wars and the tariffs. Because again, the import tariffs do not hurt us. Okay. It's the exporting, which hurts farmers, producers. But the import to the retailers, they're going to raise their prices and tell you, oh, well, the tariffs killed us. They're full of crap, okay? Because the yuan has been devalued so much with the strong dollar that the tariffs have been eaten up in there already. So again, overall, we expect the markets to continue to rally. Okay, and again, we saw 2 days of heavy volume and nice volatility, and then 2 days later, it's right back to where you were. No volume, no volatility, nobody cares. And again, that's the way markets trade. And until they have a reason to break out one way or the other, okay, they're going to continue to most likely drool and drip their way higher. And that's really what's going on with our positions in the markets. And we're going to step out of here for a break on Bubba's Bottom Line here on Sunday, the 8th of December. And we're going to be right back with my commentary. What's up, everybody? Listen, again, we've done some great webinars, and if you'd like to hear either our hedging webinar or our micro mini webinar, certainly you can email me at bub@bubbatrade.com. Love to share it with you. They're free. Okay, we do have classes or products for those, but you can watch the webinars for free, get some ideas. Hopefully it'll help you out. And of course, don't forget about our high school program at Patreon, patreon.com/Bubba Trading. That's patreon.com/Bubba Trading. Now let's get back to Bubba's Bottom Line with me, Todd Bubba Horwitz. Welcome back. It is Bubba's Bottom Line. It is Sunday. It is December the 12th. December the 8th. Trying to make time go. And of course, next week I'll be doing these updates from Las Vegas. I have my seminar plus the rodeo in Vegas. So we'll be out in Vegas, and so you'll get my updates from Vegas. But of course, I always have something to say, and I've always got an opinion. And I don't know, I guess the real question I have for everybody, has the world of political correctness gone too far? Have we lost our marbles with this political correctness? This goes back to, we talked about this a couple of weeks ago about, trying to erase American history, okay, of some of the bad things that have been done over the years. But I believe, as I've said then, we've grown from them, okay? And I think that, again, you can't go back and say, well, that didn't happen. It happened, so let's make it better. And I think we've done a good job at that. Obviously, still always issues. But the Peloton, I don't know if you followed the story at all, but Peloton, the new bike, which I don't know how they're ever going to make money. But anyways, if you're a workout person, great bike, you ride, it's a $2,500 purchase plus I think $55 or $60 a month for the video feeds and the live classes. But there's a commercial going around with a guy and his wife, beautiful young woman. And of course, he bought her the Peloton and she thanked him, and it was a whole big thing. And it's like, that was sexist because he bought her a bike to work out to make her even in better shape. Now, first thing is, okay, if you're going to work out, does it matter? And you wanted it for a gift, okay? So, she showed how happy she was, but now Peloton has had to cut parts of that commercial out because it's considered to be sexist, okay? I don't see it. Of course, maybe I'm just, I'm just different. I don't know. I mean, I think the political correctness part has just gotten out of hand. But secondly, I said, why would anybody complain about that? It was a nice gift that somebody wanted. In the meantime, the stock got torched this week based on that commercial. Are you kidding me? This is what, again, every word that you say is so meaningful, and it's really meaningless. Is this what we're teaching our children today? That you have to be so perfect at how you phrase something and how you do something. Pretty soon you won't be able to tell your wife, girlfriend, boyfriend, husband, friend, whatever, I love you, because it won't be politically correct. It's a bunch of bull. Okay? Let's stop with the bullshit. And everybody, have a great weekend. This is Bubba's Bottom Line. Todd Bubba Horwitz. And sorry for that little X-rated ending, but what the hell. In the meantime, we had football tonight. I don't remember the game, but I know the game I want to follow, and that is the New England Patriots against the Kansas City Chiefs. Tom Brady is washed up. It's over. He should retire. Well, Kansas City has no defense. Okay, Pat Mahomes is great. Love him. Okay, great team. They're going to New England. We're going to lay the 3 points with Tom Brady and say that he ain't done yet and ain't time for him to retire. In the meantime, have a great weekend, everybody. We'll talk to you tomorrow from Las Vegas at my seminar. Have a great weekend, everybody. Thanks so much. We'll see you later with another Bubba's Bottom Line.